Yo, what is good, YouTube? We are back with another video. If you're not in the free Discord, go join it. It is the first link down below. But today's video, we're going to be going over how to use the daily profile with Equilibrium to catch the morning, like 9:30 open volatility injection to hit the draw on liquidity. Right, so right here we have this rough depiction of Asia, London, and New York, and then we have premium and discount lined up or laid out. So let's say right here we have midnight open right there, right? So you want to see this midnight open get manipulated below, and then you want to see London session trading into a higher time frame PD array, right? So if London traded into a higher time frame PD array, we can watch for a New York reversal to go higher or lower depending on the scenario. So right here in this one, we have London trading into a higher time frame PD array with displacement up, and then you want to map out premium and discount of the daily range as it is. So if Asia is high, the high of day so far, with London being low of day, you want to map that out, and vice versa. If Asia is low of day, London high of day. Then we have New York 8:30 opening up right here, and we have Equilibrium lying right here. Let's say we have an imbalance right here. Where is that? It is directly below Equilibrium. So we have a low here, we sweep that low inside of that higher time frame PD array, and then we have 9:30 open, let's say right around here, and then we have the 9:30 volatility injection to make us run to that buy side, sell side objective. So we're going to go over a few examples of what this would look like in a chart. So the first example we're going to go over is this example right here. What did we do in London session? Well, we took the low and the high of Asia. So now we have seek and destroy profile. So since London made both the high and low, we're going to mark off this equilibrium price, right? The higher time frame PD array does not matter since we are in SMD conditions. So what are we going to be targeting first? Well, if we take a look closer, we can see that no bullish PD arrays are being held, right? Fair value gap gets disrespected. Displacement up gets disrespected right here at 8:30. So we are probably going to be going to target, well, we have relative equal lows right here, so we're probably going to be targeting these relative equal lows, right? Low resistance liquidity right here, right? So right here at 9:30, right, we do come up and tap equilibrium of this daily candle so far, right? So right here at 9:30, what do? Come up, fill out this imbalance, and take this high, and then we go straight down to sell side. Look at where we tick. We tick the equilibrium of this daily range so far, and then we deliver to sell side. So right there is a great example of using this equilibrium of the daily range so far. So let's move on to the next example. That was from this chart right there. So this next example, same thing, seek and destroy profile. So London takes out Asia high and Asia low, but we have this fair value gap right here. So we have an imbalance that's going to be acting as a PD array to deliver us to sell side. So let's mark off equilibrium and go down to the 5-minute. So let's turn these boxes off. So we have sell side resting right here. So this is going to be our target, and then obviously we can go into a buy program to target the highs. But if we are using the 9:30 volatility injection, we want to be on side of the volatility injection. So what do we have? Well, we have a sweep of a high after entering that fair value gap. So we're going to mark this high off. Takes a high, 1 hour fair value gap, and enters the higher time frame PD array, sweeps a high. We now have a breaker right there. We have an order block right here. We have equilibrium lying right here, so we come up into a premium, fair value gap, order block, breaker, delivers us straight down to sell side. So if you want to enter right on the breaker, stop would be above this high, target would be down here at these lows. We deliver straight down to those lows with the 9:30 volatility injection. Yeah, 9:35 does give us a little move higher, but we're on side with the volatility injection at 9:30. So the next two examples actually happened on Thursday and on Friday. So we'll go over Thursday first. right here. So London, once again, Asia low, Asia high. But what we have is a change in the state of delivery on Thursday, right? If we go to the 30-minute chart, all these consecutive up-close candles have been taken, right? This is a doji, breaks the series of up-close candles. So these 3 up-close candles will now act as an order block. So we don't take out this high, right? We come very close, but we do not take out this order block high. We have sell side resting right here. Now we have equilibrium lying right there. If we want to go down to the 5-minute chart, what do we see? Well, we come up and then we dump lower. So 940. So we have already opened. So, oops, my phone almost fell off me. So we have already opened, so we aren't using that 930 open as the volatility injection. What's next? 10 a.m. We come up into a premium of the daily range into this order block. Why is this an order block? Well, all these consecutive up close candles that takes out this high has been closed below. So now these are order blocks. This trades into it. Now this would be your propulsion block right there. We come up into this propulsion block and then we dump lower down to sell side and continue to dump lower. Now, if you want to mark out standard deviations of this move, 2, 2.5, and then we come in the vicinity of that -4. But if you want to use the 15-minute, it would be, I think it was this. We come into negative, what is it? 15. It was right here. We come into -2, 2.5, and then we come back up, and then we retake this low. So right there was another great example. Also, it was this 15-minute fair value gap that lied in a premium, and then we dumped even lower off of it. So if you want to take it off the propulsion block or the 15-minute fair value gap, it doesn't matter. Or if you wanted to go down to the 1-minute chart, we have this swing high taken. Let's get rid of some of this. Right here is that 50% of the range. We have change in the state of delivery. So now this would be acting as your order block. We trade up. This is a protected high because of this order block. And then we continue the sell off lower. So if you wanted to even go lower in time frames, you could use this right here. And boom, we deliver lower. So we're going to go over Friday. Now Friday, where is it? Right here. Friday. Once again, we make equal highs. But what do we have? We have these up close candles, which is also this 4-hour order block. Why is it an order block? Well, it takes out this swing high. So now this could be a protected high, right? So we take out this buy side level with a green candle, and then we're going to mark off, boom, boom, CE, mean threshold, 30. So we trade up, don't get to that London high, reject off of it. Right here, we create equal lows, right? Right here, we don't take this low yet. Where do we trade up to? Daily equilibrium, the daily range so far, right? This would be acting as your breaker. Comes up, taps into this breaker. Why is this a breaker? Well, we have a swing low, new swing high, taking out these highs. This would be your breaker now. So 11 a.m. trades up into that breaker, and then we sell off the rest of the day. So the next one we're going to be going over is the ES, our final one. ES, hourly chart. What did we do? Well, London came down. We are trading into this fair value gap. So fair value gap's getting traded into. Asia has made the low of the session. If we take a look right here, equilibrium lies directly within this fair value gap. Sorry, I couldn't think of it. Fair value gap right here. Obviously, we have low resistance liquidity. We have relative equal highs at these highs, so we're probably going to be targeting this high. And now we can go to the 15-minute. What do we see on the 15-minute? Well, we have this tiny fair value gap, but we also have a change in the state of delivery right here. So this is now going to be acting as an order block, right? This series of down close candles was closed above. So right here is going to be acting as an order block. And what do we see on the 5-minute? 5-minute turtle soup. Now, this is scary at first, right? It is scary to just buy here, right? Thinking that 930 will push us straight up. But we are using, like if we take a look right here, low resistance liquidity, buy side, hourly fair value gap, 15-minute order block. We are using the narrative that price is going to go straight to the buy side level. We are sitting directly under a premium, right? We're sitting directly inside of a discount. So we are using this volatility injection to target the buy side objective. So you can't be scared to just have your limit buy, or if you want to see the candle closure, or you want to see the next candle's closure, right? 9:45 opens up, closes green, and then we run straight to buy side. So we are using the volatility to give us an injection to go to the draw on liquidity, right? So we tap that order block, closes green, you can mark it buy there, and then it runs straight to buy side, right? Low resistance liquidity, hourly chart, equal highs up here, relatively equal. We take it by like a tick, and then we have this high, so we have low resistance liquidity on our side. And maybe we formed an SMT right here. Let's go to NQ. What day is this? June 24th. Let's get rid of all this. The 24th of June. So let's go see if there was 24th of June. Is right around here. 24th. Okay, so what time did this happen? 10 a.m. right here. What do we see right here? The 21st low was taken. 21st was not taken. So we have a higher time frame SMT. Boom, right here. Perfect setup to target this low resistance liquidity. So now I'm not saying use this all the time, right? There's a plenty of times this doesn't work, right? If we turn on this, right, you always just have to be using narrative. These are news events, you can tell by the wick, but it's always just with narrative. Like there's plenty of times that lower time frame PD arrays are gonna hold us to, like, see right here we have this fair value gap, and if we go to the lower time frame, there's probably something else right there holding us to not tap this equilibrium price. This fair value gap here, we soup this low. So there's plenty of reasons and ways that we're not going to be getting to equilibrium, and you just have to be aware of the narrative and lower time frame PD arrays. Like if we go to the 5-minute, closes above, fair value gap here. So there's plenty of opportunity to go without using this, but if there is a reason to use this, it's all about the narrative. So drop a like on the video. I'll see you guys in another one. Peace.